Why the elite celebrate when your money loses value. When prices go up, you panic. But when inflation spikes, the ultra-rich pop champagne. While you're clipping coupons and skipping vacations, billionaires are using inflation as the greatest legal wealth hack ever invented. This is the story of a hidden cheat code, a mechanism so powerful that the elite actually lobby for the very policies that crush your purchasing power. To understand this upside-down game, you have to go back to an 18th century economist named Richard Cantillon. He discovered something twisted. When a central bank prints money, it doesn't sprinkle equally across the economy like fairy dust. It floods the financial system from the top down. The first people to touch that freshly printed cash, bankers, hedge fund managers, corporate giants, get to spend it before prices rise. They buy assets while everything is still cheap. But by the time that money trickles down to your paycheck, the price of milk, gas, and rent has already exploded. This is the Cantillon Effect, and it is the engine of modern inequality. The Federal Reserve doesn't print dollars and hand them out on street corners. It buys financial assets and subsidizes lending. During the pandemic, a staggering 6 trillion freshly printed dollars were pumped into financial markets in just 2 years, roughly 1 in 3 of all dollars in existence before the pandemic. That cash didn't go to your savings account. It rocketed straight into stocks, bonds, and other assets owned almost exclusively by the wealthiest people on Earth. Here's the brutal math. The wealthy hold 90 to 99% of their net worth in assets like real estate, stocks, and private equity. The middle and lower classes keep most of their wealth in cash, deposits that earn zero interest while inflation silently devours them. When the Fed floods the system with money, asset prices soar. The rich get richer simply by owning things. The poor watch their grocery bills rise and their savings evaporate. Since the first quarter of 2021, the net worth of the wealthiest half of American households has grown 14 times faster than that of the bottom 50%. But this is only the opening act. The real masterpiece is how billionaires use inflation to make their debt disappear. Meet the buy, borrow, die strategy, the wealth cheat code the rich never share. A billionaire buys an asset, a tech stock, a Manhattan skyscraper, a Picasso. As inflation drives up the nominal price, they don't sell it. Selling would trigger a capital gains tax. Instead, they borrow against it. A loan is not considered income, so there's no immediate tax. They take out a $100 million loan at a rock-bottom interest rate, live luxuriously on that tax-free cash, all while their asset keeps appreciating faster than the interest on the loan. Then they die. At death, the tax code grants a magical step-up in basis, wiping away all those capital gains. The heirs sell the asset tax-free, pay off the loan, and the dynasty rolls on without ever paying a dime to the society that built the roads, courts, and infrastructure that made their wealth possible. Inflation is the secret sauce that makes this whole recipe work. It gooses asset prices while cheapening the real value of the debt used to finance their lives. The billionaire, laughing all the way to the bank, knows a dirty truth. A dollar borrowed today will be paid back years from now in dollars that are worth significantly less. And they don't just borrow money, they actively pray for inflation to bail out their bets. Legendary hedge fund manager Paul Tudor Jones put it bluntly: all roads lead to inflation. I'm long gold, I'm long Bitcoin, I own zero fixed income. The playbook to get out of this debt problem is that you inflate your way out. He told CNBC that policymakers will deliberately keep real interest rates below inflation to manage the nation's mounting debt, effectively engineering a silent wealth transfer from savers to speculators. Investor Ron Barron put it even more starkly: they pay it back by making your money worth less, estimating that inflation could have the value of cash every 14 to 15 years. This is not an accident. It's a policy choice dressed up in economic jargon. The data is staggering. A JP Morgan private bank report warns of a new inflationary era that poses a silent risk to wealth, but not for everyone. The risk is for people holding cash. For those holding stocks, private equity, timberland, and Bitcoin, inflation is rocket fuel. Private equity has historically outperformed public stocks by 6% during periods of high inflation. Family offices, the private investment arms of the ultra-wealthy, are pouring billions into real estate and alternative assets specifically because they expect inflation to keep running hot. Timberland, infrastructure, farmland, even entire forests. These are not just investments, they are inflation-proof bunkers that ordinary people can never access. Wealthy investors have committed $10 billion to a single timberland manager, but regular folks have to settle for shares of rats that barely keep pace. Meanwhile, the bottom half of the population experiences a completely different economy. Inflation for the poorest citizens is significantly higher than the official consumer price index suggests, because they spend a far larger share of their income on food, rent, and fuel, categories where prices rise fastest. Wages adjust slowly, constrained by annual contracts and weak bargaining power, while rents and corporate profits race ahead. The wage lag hypothesis, confirmed by research in the Open Economies Review, shows that the wealthy capture the upside of rising prices long before workers feel a single extra dollar in their paycheck. The result is a two-speed economy where the rich inflate and the poor deflate. Oxfam's latest report found that the world's top 1% bagged nearly two-thirds of the $42 trillion in new wealth created since 2020, almost twice as much as the bottom 99% combined. The global top 1% have captured twice as much income as the bottom 50% over the past 2 decades. This is not a glitch in capitalism. It is the system working exactly as designed for exactly the people it was designed to serve. And here's the darkest twist of all. The billionaires who benefit most from inflation are the same ones who present themselves as saviors when costs spiral. They fund think tanks that oppose minimum wage hikes. They donate to politicians who slash social safety nets. Then, as working families drown, they step onto stages and pledge fortunes to solve inequality, using the exact donor-advised funds and charitable loopholes that keep their wealth permanently tax-free. The Adam Smith Institute calls inflation the most insidious and cowardly tax there is, one that silently redistributes wealth from the ordinary citizen to the elite without most people having a clue what is happening. It is a rigged game where the referee wears a bespoke suit and the scoreboard is kept in a private vault. So the next time you hear a central banker talk about stimulating the economy or ensuring liquidity, translate those words into what they really mean. They mean the helicopter is dropping money, but it's only landing on the helipads of penthouses. They mean your savings are being devalued, your rent is climbing, and your wages are standing still. All so that a handful of asset owners can watch their portfolios swell by trillions. The elite don't fear inflation. They celebrate it. It is the ultimate cheat code, a legal, invisible, perpetual transfer machine that takes from the many and gives to the few. And until you understand the game, you will keep losing it. They pop the champagne, you pay the bill. That is the inflation illusion, and it is the con of the century.